in the context of Americans in particular, over the last 20, 30 years, we've seen a massive transfer of power from American citizens to Washington, to New York, and you've got huge power in terms of some of these government agencies, the US military, etc., was being funded by a fiat currency system. And the thing is, I actually did a seminar in Adelaide last week, and I actually had a cable that was published by WikiLeaks, and the COMEX was designed to basically drive people away from the market. So part of the whole structure of the corruption at COMEX is to perpetuate the power of the central bank, of the federal government, and the imperialism of the United States has been financed by this fiat currency system, and that can only happen when gold and silver is suppressed. So I would say that this whole story is about liberating the silver price. In American context, it's about Americans, getting back more political and economic freedom away from Washington. But I would say that given some of the disastrous wars that the American military has been engaged in the last 20 years, whether Afghanistan, Iraq, or a whole bunch of other countries, the liberation of gold and silver will actually place a limit as to what the Congress can do in terms of foreign military ventures. And that will have a very interesting and perhaps liberating impact around geopolitics around the world.
Welcome back to Liberty and Finance and the All-Star Silver Summit. We have a wide variety of silver experts here, not all whom we could have gotten, but as many as we were able to fit on one screen to try to get you some awareness about what's going on. We've been hearing lots of news about upcoming pressure from retail investors on the physically tight silver market. We wanted to meet with people who are aware of that, people who are involved in it, people who have been talking with lots of other either analysts or retail investors, people who have inside knowledge in the silver supply chain to find out, why is this a major concern? Why is it important? And what are ordinary people doing about it? I'm going to be serving as the role as your host, Dunagun Kaiser from Liberty and Finance, and my associate, Kaiser Johnson, also of Liberty and Finance, to ask questions of our guests. I'm going to introduce several questions to our guests. Our guests include David Morgan, also known as the Silver Guru, author of the book, The Silver Manifesto, and founder of themorganreport.com. We also are welcoming Bill Murphy. He's the co-founder, together with Chris Powell, of the Gold Antitrust Action Committee, GATA.org. We have John Adams, Australian economist, co-host of In the Interest of the People, and founder of adamseconomics.com. We have both Jim Lewis and Ivan Bayoukhi, co-founders of the Reddit Wall Street Silver Group. Chris Marcus is the founder of arcadiaeconomics.com, author of the book, The Big Silver Short, organizer of Silverfest 2020 and soon to be Silverfest 2.0. He'll tell us about that. And a silver activist who recently coordinated a peaceful protest at the CFTC calling for free and fair silver markets, also founder of the Silver Industry Integrity Committee. Andy Schectman is the CEO of Miles Franklin Precious Metals Investments. Robert Kientz is the editor and publisher of goldsilverpros.com. Mario Innecco is the host of the YouTube channel Innecco64, the home of alternative economics and contrarian views. So gentlemen, thank you very much for joining us here on this Silver All-Star Summit. I would like, if we could ask David Morgan, who I met first really, to kick us off with a keynote. We're gonna have very brief times for any of our speaking, but to set the stage for us on this eve as we head into the Silver Squeeze weekend that we've been told is coming, May 1st. But David, you looked at this topic from a perspective of some distance and over the distance of years and had a few words to share with us. We know you have to leave early, but we wanted to give your chance for that before you do.
Well, thank you, Dunagun, for first allowing me to go first. Welcome everyone, my colleagues and everyone that's going to view this video. I wanted to start off with a couple of facts, and then I'm going to read a letter that was written to me years ago. You'll be able to determine that by the prices that I'll be quoting in this letter. Some of this stuff may not be familiar with you, but in today's internet age, if I start using terms like running the stops or short squeeze or short or whatever, and you don't understand those, then you can look them up quite simply in an investment encyclopedia or just Google it. So I'm not trying to talk over anyone's heads. Any of my colleagues here will probably know every term I'm going to use, but those that are maybe brand new to the topic or haven't heard these terms before, really with today's access to knowledge, it's not very difficult to find out with a little bit of tapping on the keys. So what I want to start off with saying is the silver market is based on a derivative. The silver market is not based on silver. Underlying the silver derivatives market is silver. And silver, as defined by the silver industry, is what's called good delivery bars. And good delivery bars are known in the industry as commercial bars. And commercial bars are usually rough poured bars, which means at least 3/9 fine silver. And they come out to around 1,000 ounces. But it's rare to get an exact 1,000 ounce bar, although it happens occasionally. And those bars are hallmarked with an indentation of what the fineness is, who has manufactured it, and what the true weight is in troy ounces. They are primarily kept in the LBMA, the London Bullion Management Association, that used to use a silver fix, and also in what's called the COMEX warehouses, which basically they are, but they also referred to as vaults. So when the silver price is determined, it is determined on the market for future delivery called the futures market or futures exchange. So the price is determined by contract bidding back and forth. And once that price is determined, and it fluctuates during the day, all day, basically, except the London fix is a fixed price. I won't go into that. That determines the physical market. So the price is determined in a paper market, but the physical market is reflective of that determined price. And to be as fair as possible, in almost all cases, the commercial bar side of the business has been able, again, in most cases, to deliver upon request at the price determined in the paper market. That's not true on the retail side, and I'm sure a lot of my colleagues will embellish that. So a lot of it has to do with, what's really going on in the silver market. And I could lecture for 5 hours and probably confuse everybody by the end of that. So rather than do that, I'm going to read you a letter that I received that pretty much outlines very succinctly what happens in the silver market. I will add a few words, and then unfortunately, friends, I'm going to have to disappear. But this is probably as close to the truth as I can give you. And the beauty about this is I didn't write it. So excuse my nearsighted or my age on my readers. And here we go. Mr. Morgan, I enjoyed your newsletter excerpt of February 12th, which I found on the Kitco website. You stated perfectly some key reason for silver's problems in getting out of its own way. And your call for further weakness was precedent. I guess I'm part of the problem. I've traded COMEX futures actively from the pit for over 15 years. Over the years, the amount of futures contracts that were traded has surely dwarfed the actual physical market, making it difficult for silver to manifest its true fundamentals. As you alluded, it's quote unquote Groundhog Day again on the floor. Over the past month, I watched one fund accumulate an eye-popping long position, and I followed its progress as best I could through the open interest and commitment figures. when prices started slipping away from last week's test of the $4.85 to $4.90 level, I could hardly believe my eyes when I saw early evidence that the fund was starting to sell. I went across the pit to a trader whom I knew was trying to stick with his longs, and I said, quote, "I've got bad news for you. That selling you see over there, it may take 3 weeks," end quote. The fund sold heavily all last week. The usual bank traders were sopping it up, secretly relieved, I think, that prices had failed to break into ground that they could not control. Young traders asked me how these funds could keep getting chopped up like this. They don't realize that a 30-cent chop in silver is a minor inconvenience compared to the strong positions most of these guys have in gold and crude. As you know, the banks will continue to play puppet master as long as the silver game remains quote unquote closed. The banks know the upper parameters of the fund's buying power. The banks know when the funds have reversed themselves into an untenable short position. It will take new players to get Bill Murray silver market out of this loop. Certainly, investment demand is the wild card that banks and recurrent short sellers cannot control. Silver will be called lower on Tuesday morning, and although I'm a bull, I'm going to be getting short on the bell. There's no short-term success in getting in the fund's way. Thanks again for your insight, a COMEX floor trader. So thank you all for allowing me to open. I think that is as strong an opening as I could possibly give. That letter is still out on the internet somewhere. And this was pre-ETF and everything else, which is also another derivative. Basically, I'll just go through it very quickly. I know my colleagues are probably tired of hearing me say it, but the two sides are basically the bullion banks. You could call some of them commercial banks or investment banks, who basically have access to unlimited funds. And then the other side, for the most part, is either the small public, but primarily it's the trading funds. And these are usually mutual accounts of people that invest their money with a certain entity that will trade futures for them. But they have limited funds. So the game goes like this. I'll just use numbers, so it's probably easier to follow. But silver's at 5, and we're starting the game again for the umpteenth time. So silver starts out at 5, and the funds start buying, and the price goes up, 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 and the bank's short on the way up. So it goes 5, 525, 550, 575. So silver's made a 75-cent move. The funds are now out of money. But remember, they started buying at 5. And now the banks know these guys are out of money. So now they short even heavier than they have. I mean, the funds have only one thing they can do. They're long, they're out of money. They're in the profit, so you sell or take a profit. So when they sell, when the funds sell, the banks sell on top of them. So there's an extreme amount of selling pressure every time that the funds run out of cash. So now what happens? Well, all longs have to be met with the short, and all shorts have to be met with the long. So there's someone in the public, or maybe a fund, or someone out there, and the order has to match. And they'll match orders. So what happens is, as the price is rising from that 5 to 575 theoretical idea, there were stops all the way up. So every new position that a fund opened up at, let's say 550, it went to 570. They might put a stop at 550 to protect their profit. They wouldn't lose anything. They haven't gained anything until they sell. So once all the seller pressure starts, you start to see the rip roaring tanking of the market, because the funds don't have any other thing to do. They have no capital, and they are picking up profit on the way down, but then it starts to reverse, and they start getting what's called running the stops. And some of those stops are on positions that were once profitable but became unprofitable because the stops were set at a level where they would take a small loss. So once the stops are run and we get back down to, and I'll just theoretically say $5, what has happened is the banks that sold at the very top and all the way up have made money all the way down on almost every trade, maybe not every one. And the funds have made some money on the way up, but mostly they were told by their computers to reverse their position as things started going against them, and their stops being called, or perhaps they're called for more margin. And then the market's open interest goes from a very high level to a low level, and the game starts all over again. And maybe this time the price settles out. I'll just make up a number, $5.20. So that is a play and repeat over and over and over again. In fact, I know very few people believe me, and you don't have to. I don't know if I'd believe me. But before the advent of the ETF, you could almost trade silver to the nickel using the Commitment of Traders report and looking at the open interest. Now that's changed drastically over the last 15, 20 years. But at one time, the silver market was so thin and there were so few players and there was so little money that was actually in the accounts that you could pretty much see almost to the dime where this thing was going to turn. So I don't want to belabor the point. I hope I didn't overspeak it. I think the letter is much more important than what I have to say. But for anyone to think that the silver market is absolutely free has got another thing coming. It's not. Wish I could say more. I hope I've said enough. I
Appreciate
thank
it,
you
David.
again for letting me start. I think I kickstarted this thing off in a strong way. That was my intent. And I will be watching this at a future date. Thank you, everyone.
Thank you very much, David, for joining us.
Thank you, David.
Was hoping we could rotate to Bill Murphy to talk to us about this. You having founded the Gold Antitrust Action Committee, have been concerned together with your co-founder, Chris Powell, about integrity or the lack of integrity and why it's worth fighting for in these markets for a long time. Can you tell us in as concisely as you can, maybe in just 1 or 2 minutes, why you feel it is so important to get to integrity of metals trading markets? Or you can maybe start with what has convinced you that we don't have that, and then switch to why you think it's so important.
Well, to begin with, what David Morgan was talking about says it all. It's not a free market. And that's supposedly what the United States and free markets are supposed to be all about. And it's very clear to me 22 years ago when Chris Powell and I started GATA that something was very wrong. It looked to me like the bullion banks were stopping gold back then. It was below 300 and silver around what Dave's talking about, $4 or $5. And it's just not right. It's not the way things should be, where the little guy always gets ripped off and the big bullion banks, as Dave was pointing out, make all the money. It's just wrong. And it's such a big deal. My colleague Chris Powell said the United States, which I believe is behind it, along with the Bank for International Settlements and the bullion banks, they just don't want it to be known. As Chris said, they'd rather discuss allow nuclear secrets to be known than what they're doing in the gold market. Chris has done an incredible job for 22 years, getting in touch with the press. They won't allow GATA to be mentioned. That's how bad it is, what a big deal it is. And if I may, I'll finish up with, I've never seen anything so bad in all my life in 40, 50 years of being involved with the silver market as we have right now. It is absolutely ridiculous. You've got copper going berserk, lumber going berserk, corn making highs, the CRB making highs, the S&P making highs, the NASDAQ making highs, the Dow. Everything's on the move except for the two markets that ought to be on the move the most, with all the money that keeps going into the United States system and the budget, the deficits. It's mind-boggling. And yet, silver, 26. It's just terrible. And so I know myself, some of the guys, Craig and Chris, are going out and getting people to buy silver. And I went out and bought a bunch of 100-ounce bars, which they suggested we do. And my brother Tim, who works at Scottsdale Bullion and Coin, said they don't even have any 10-ounce bars. I couldn't buy them if I wanted to. They won't take any orders. But I did buy a good amount of 100-ounce bars, and I hope that when this might get discussed further here, that really gets going by the end of the week and starts putting some pressure on the bad guys. So thanks very much, and really proud to be a part of this group. That's it.
Appreciate that, Bill. And I wanted to turn to Chris Marcus from Arcadia Economics. Chris, you, besides writing the book, The Big Silver Short, and also protesting at the CFTC, have basically, you've interviewed influential members of the governing bodies that have been keeping an eye on this for some time and actually unearthed, basically smoking gun evidence about things that have been going wrong in that area. Can you talk to us about, I guess, the key points that you think people need to be aware of about what you consider the most important structural injustices that are going on? And then we can turn our attention, I know you've got to go, but we can turn our attention to what people are planning to do about it. But let us know what your research unearthed.
Sure, I'd be delighted. I just thank Bill and David. You said you had David on first, and a great way to start it. I don't know, would any of us, maybe aside from Bill, be here were it not for the two of them? So I'm quite grateful. That's why I had them in the book rather than me just writing stuff. I say that because it was a genuine attempt. I wanted to find out what I didn't know, not like other stuff that you see out there. So perhaps actually, this may support what David was saying and answer your question at the same time. Would you kindly enable screen sharing for me so I can pull a little silver magic trick for the audience tonight that I think everybody will enjoy? Because David talked in quite detail about some of the fascinating things going on. And I know the CFTC never commented on this, but this was a funny little article from back in 2016 where we learned from Deutsche Bank, apparently they didn't pay attention to their compliance guy like I did mine when he told me when I joined a trading shop that, interestingly, they talked about how if they do things correctly, they can screw their customers harder. But maybe what David was referring to was this little gem down here. It's known as the muscle and blade technique, somewhere in here. Smoking gun bolstering claims, rigged silver prices. Yeah, and they taught each other how to you use blade as a small blade, but then two guys doing it together like this is a small muscle and blade. I see August. And just take a look. Now here's August 1st. I wonder if that is what a muscle and blade looks like in reality. Yet fortunately, we won't get bogged down by silly details like this. I'm grateful the guys from Wall Street Silver are here. I can stick around. I would love to know what they think about the LBMA's new report. Where after everyone, every bullion banker outside of Santa Claus called them a bunch of loser keyboard thumpers, then the LBMA writes this report apparently confirming that they were scared shitless the entire time. Here, global ETP holdings hit a record of 1.2 million ounces. By the way, I hear that tossed down around a lot, but just because people were buying metal and putting in there, all right, they had more, but the banks that are short didn't. Leave that aside. As impressive as this was, social media frenzy. And for coins, bars, and ETPs, think ETFs, SLV, and otherwise. For the latter, surge 120. That's just for ETPs. That doesn't even include coins and bars. So in just 3 days, by the way, I don't even know if the Wall Street Silver Group had been started back then, and now they have 65,000 people making videos. Yet in 3 days, just the ETFs alone took 120 million ounces. Every bullion dealer I've talked to got blown out. And here's the LBMA telling you that only left 360 million left. So Jim and Ivan, it's good that you guys have something else to do that week. If you had kept, leading the charge at the same pace, by the end of the following week, the LBMA would have defaulted, thereby exposing some of the non-genuine statements you hear. Furthermore, you don't have to take my word because the LBMA says it would have only been a matter of weeks before London stock was used up. The concerns were very real. So maybe the keyboard thumpers should definitely, actually, I shouldn't tell them about this report because fortunately it does suggest the pool of available metal should be sufficient for the foreseeable future as long as there's no repeat of social media. And basically, if nobody ever talks about silver between now and the end of the apocalypse, the price should be able to be kept in check. If that doesn't happen, should that occur, higher prices would almost certainly be triggered. But fortunately, they stand by ready to short with more heavy selling. And I'd just like to read, if I may, and I'll keep this quick because I know there's a lot of people with important things to say here, but some of these are just so special that, I mean, for example, if you scroll down here, you know, these events which have almost become folklore in silver market, that sounds so exciting. Although I can't wait to write a book about how the CFTC launched the silver investigation February 1st, one day before the greatest crime in silver market history, which is a high bar to raise. But really, when you get to the end of the day, here's an interesting quote. Let's scroll down to page 13. Because as David Morgan talked about with supply and demand, it's interesting. Let's see. Here they mention banks' risk departments continue to limit the ability of their trading desks to issue contracts. Now, this I believe is 2020 they're talking about, not this year. Nonetheless, that had the effect of tightening their supply and in turn kept futures prices higher for longer. So it sounds like supply and demand does exist in the paper market, where if the banks stop writing contracts, the price goes up. If they keep writing them, the price goes down. And lastly, if I may just conclude with this, perhaps now that actually explains and makes a bit more sense what the commissioner of the CFTC mentioned right here in this rather unusual quote. He talked a lot about transparency, so I will be completely honest. I actually wrote up all the evidence of how I thought it was bizarre that silver fell 10% on a record-setting day of demand on February 2nd. Only took me 10 days. In fact, I was making videos within days, but I had to contact some lawyers and take some time to write it up. Yet here, this is what he said on March 18th, which maybe somebody else could help explain.
And in many respects, the resiliency and the structure of the futures market really were able to tamp down what could have been a much worse situation in the silver market.
Well, certainly that sounds quite fortunate. I guess the question I'm wondering is that if everything was okay, what was it that needed to be tamped down? What was the danger alarm bells that were going off? And especially if we just found out people were buying so much silver that the LBMA was shitting their pants, the price goes up. If people buy, it goes up. They sell, it goes down. That's what I learned. That's what I had to sign compliance forms when I was in my trading career. So I think I have the credentials to say this. And I think I know exactly what he was saying. And let's just say I remember May 1st, 2011 clearly. And I'm quite excited about the 10-year anniversary because maybe we could make a game show. It could be the keyboard thumpers versus Dick and the LBMA gangsters. We could take side bets, write derivative contracts, have a whole market, some party, and it should be fun. So I can't wait.
Well, Chris, thanks for joining us and sharing some of those documents. So yeah, appreciate you weighing in and sharing some of that information that helped people understand why this is important. And I guess that's another thing that we'd like to turn to John Adams from Adams Economics, Australian economist, and who's been doing some work on In the Interest of the People with his co-founder of In the Interest of the People, Martin North, for some time. And can you talk to us, John, about the analysis you did of the overall silver market and showed where there are structural strains and where it seems that this desire that people in this community have expressed for bringing truth and clarity and transparency to what has otherwise been characterized as a market where that's been lacking has in fact caused strains, and where we think that those strains are likely to show up and how we think that that's going to affect the ability for true and fair markets to be reestablished.
Sure. Thank you for having me on the show, Dunagun. So I wrote an article on my website at the end of February, early March, saying that the silver market was approaching breaking point. And throughout February, as the silver squeeze movement started, we saw record demand in the North American retail markets, and retailers like Miles Franklin and a whole bunch of others were struggling to get sufficient supply to sell to retail customers. We saw premiums rising on wholesale bars. Obviously, as Chris Marcus was mentioning about SLV changing their perspective in early February, and obviously the lbma report is a big sort of signal as to the concerns that were being raised in London. Obviously, leasing rates. David Jensen had some data in February about leasing rates in the silver market and among the London banks. And it was much more difficult to source silver in terms of borrowing from other banks, and the cost of borrowing was going through the roof. And obviously the crown jewel is COMEX, and I mean COMEX is fascinating. When I look at these warehouse data, I'm tracking this on a daily basis. So the warehouse repository for silver peaked on the 2nd of February at 399.7 million ounces, and as of this morning here in Sydney, we're looking at the COMEX data, 39 million ounces have left the vaults, and we haven't got to the main contract yet. So so I think it's definitely all heading in the right direction. And what I should say is that since I wrote that article in late February, early March, we've continued to see further examples of shortages throughout the market, whether it's unallocated, pull allocated accounts at the Perth Mint, Fidelitrade, Kitco, ABC Bullion. I mean, like right across the world. I mean, obviously, even in terms of the UK Mint, running out of silver bar products at the retail level. We are seeing, particularly at the retail level, shortages, and that has been exacerbating. And obviously, that's going to have a downstream impact on in terms of the wholesale market, because while there is perhaps the tightness in the wholesale market isn't as tight as the retail market. Well, where do they get the silver to make more retail product? They'll go buy more 1,000-ounce bars, and that's obviously having a big draining effect. So the retail market is draining on the wholesale market, and obviously funds like PSLV are also draining 1,000-ounce bars out of the wholesale market, and that's obviously what is the key determining factor in terms of COMEX. And obviously when you look at the COMEX data, they are bleeding silver by the day, and we'll have to see by the end of this week what the open interest is for the May contract. But look, I do think we're going to see some exciting movement and action in May, and obviously the silver rate that's scheduled to happen on May 1st, where we're asking 100,000 people around the world to buy 100 ounces. I've already bought my 100 ounces already, and to the extent that people around the world join in this effort, hopefully we'll get truth and justice in the silver market.
That's the part that I was hoping you could just close out with, if you would, is why this is important. Why is this idea, you've mentioned many different examples of shortness and physical tightness throughout the global silver flow, but why is it important for that tightness to be increased in order for truth to be shown, for transparency to happen?
I'll attack the question from two angles, Dunagun. In terms of the price, I mean, obviously, when you look at what happened in July last year, the price from mid-July to the end of the first week of August went up 60% because the bullion banks were short on silver at that current price, which was about $7.95 US an ounce. So the more silver that is being drained out of the physical market, that's going to basically put the bullion banks under greater pressure at COMEX, and obviously as Chris Marcus was just quoted the lbma document, that will force the price to go higher. And when I look at the price chart over the last 9 months, we'll probably have a price ceiling at about $30 US an ounce, and I do think that all this pressure is going to lead to cracking that ceiling, and I wouldn't be surprised if it happens in the next 4 weeks. And so that's probably what I'd say. The importance of the tightness in terms of how that's going to impact on the price. But the broader picture is that in terms of what does this all mean? It means, I think, two things. So I think in the context of Americans in particular, over the last 20, 30 years, we've seen a massive transfer of power from American citizens to Washington, to New York, and you've got huge power in terms of some of these government agencies, the US military, etc., where it's being funded by a fiat currency system. And the thing is, I actually did a seminar in Adelaide last week, and I actually had a cable that was published by WikiLeaks, and the COMEX was designed to basically drive people away from the market. So part of the whole structure of the corruption at COMEX is to perpetuate the power of the central bank, of the federal government, and the imperialism of the United States has been financed by this fiat currency system, and that can only happen when gold and silver is suppressed. So I would say that this whole story is about liberating the silver price. In American context, it's about Americans, getting back more political and economic freedom away from Washington. But I would say that given some of the disastrous wars that the American military has been engaged in the last 20 years, whether Afghanistan, Iraq, or a whole bunch of other countries, the liberation of gold and silver will actually place a limit as to what the Congress can do in terms of foreign military ventures. And that will have a very interesting and perhaps liberating impact around geopolitics around the world.
Thank you, John. And Robert, I wonder if we could get you to weigh in on a topic as a contrarian. Could you suggest what the counter arguments are to, I mean, officially, I believe we've even had some members of this group bring forward clips of quotes from officialdom saying that any coordinated action with the intention of affecting the price of any commodity or whatever is against free markets, that sort of thing. So how is it that there's an ethical or moral case for saying, well, that's what's been going on officially, it's been ignored, and so now we need to do it at a grassroots level, or what are the arguments about the ethics and the counter arguments saying whether or not it's ethical for anyone, either concentrated or grassroots, to try to affect the price of a commodity?
Well, I think the main argument is if you're doing a grassroots effort, you're supporting a market and you're buying into a market that should be for the retail investor. If you're talking about collusive actions of a regulator and participant banks in a market in which Rostin Benham basically admitted in his video at the Bayoukhi conference, said that they used all of their tools, the CFTC used all of their tools to limit the price to $30 at the same time that people were buying the SLV. When you have collusive manipulation by a government regulator and the financial industry, that's not in the spirit of free markets. When people are enthusiastic about a market and they want to purchase in that market because they believe in that market, whether it be silver or whether it be automobiles or whatever the case may be, whether it be a stock, if people are enthusiastic about buying Tesla, for example, or Apple, there's nothing wrong with that. It goes on every day. And I wrote for Seeking Alpha for 10 years. It's a large online publication that's syndicated across the internet. And the whole purpose of that is for enthusiasts to write and for analysts to write their opinions on the markets. And we do this every day, and that's normal. But again, when you have a regulator colluding with the financial powers that be to admittedly, in their own words of the CFTC regulator, to limit that using all their policy tools, because they feel as though that's their role in the market. And I don't think that they were acting in what they thought was an illegal manner. I think that they were acting in a way that they thought the market it was supposed to be. Their role was to limit the run on the price of silver because it wasn't good in their eyes, for the trading market. Forget natural price discovery. I think there's a difference between those two things. And I think it's a pretty clear difference that most people would understand.
I wonder if we could get Jim Lewis and Ivan Bayoukhi from Wall Street Silver to take the next leg of this lap here. Had a question for us as a team is, what is the mission and purpose of the grassroots movement exemplified by Reddit Wall Street Silver, and also characterized by Rick Rule, which is going to be a big conference that's going to happen, an online conference this Thursday, April 29th, called Robinhood, Reddit, and the Rise of the Retail Investor. So Robert, you just described the enthusiasm of ordinary people wanting to participate in the market. And Jim and Ivan, can you talk to us about this concept of that grassroots movement, your mission, and what is this rise of the retail investor all about?
Jim, you want to take the lead?
Sure. Ivan sort of started Wall Street Silver in order to sort of his mission has always been to wake up the masses, and that's the word he often uses on Wall Street Silver. We're trying to sort of create a new generation of younger people who actually understand the value of sound money and teach them that the current system of fiat currencies is not how things used to be. We used to have a gold standard. We used to have sound money policies that limited the extent of what governments could do. Obviously, Richard Nixon, when he took us off the gold standard, that enabled things like the Vietnam War. It was all the spending essentially from the Vietnam War is what made put stress upon the U.S. government spending because they were limited by the gold standard. So a sound money policy, as one of the previous experts here has stated, leads to war. I think it was John Adams, you were talking about that very issue. And having a sound money policy in the United States could really have incredible impacts worldwide. And what we're doing on Wall Street Silver is introducing the concepts of sound money, whether we primarily focus on silver, but also gold, introducing sound money to a new generation of younger stackers and teaching these concepts. That's basically our mission on the Reddit community of Wall Street Silver. But it's more in a community sense with a little bit of humor and also mixing in, just the cool pictures and a lot of memes and videos and speaking in the language of the younger generation on Reddit and online through social media.
And just to add to Jim, I think we have a moral obligation, even if you're, no matter what age you are, youth, doesn't matter who you are, you need to start informing people around you, start educating people, start telling them what sound money is, because you don't know what's happening ahead. Because you look in Middle East right now, people in Lebanon, they can't even get food because their fiat is completely devalued. So the only thing that could save them would be precious metals, silver, gold, stuff like that. So yeah, to add to Jim, our whole mission is to really wake up the masses. On the 3rd, we have the billboards coming up, and that's going to go over 6 different states, 70 different billboards. Lamar Advertising said the impressions will be 25 million impressions. So even if we just get a percentage of that, we can start waking up more people to sound money.
It's interesting because when we attended the Ron Paul Institute Peace and Prosperity Conference in Washington, D.C. a few years back, speaker after speaker, not only Dr. Paul himself, but also other representatives and so on, spoke about that connection between sound money and walking away from sound money as opening the door to global war campaigns and that sort of thing as well, that connection between peace and sound money for the good of the ordinary person. I wanted to ask Kaiser Johnson, who is also a licensed bullion dealer, what he's been hearing from the grassroots clients who've been reaching out to him, talking about what are the reasons why they're acquiring physical metals. And I guess that would echo, Ivan, what sort of the feedback loop of you're getting a message out there trying to wake people up. So I guess, Kaiser, can you tell us what you're hearing from people about what their purpose is or what's driving them?
Sure. And first, thanks for having me here. This is it's so cool to just be in a room with all these great minds, or in a virtual room as it is. To quote Galaxy Quest, I'm just jazzed to be here. So, but yeah, so as far as retail investors and to your point, Ivan and Jim, I've been a lot of younger people have been reaching out to me and making purchases. I would say, when I first started this job, it was, almost exclusively the 55 plus set who were making purchases. And particularly since February, I've been getting, I would say 60-70% of my clients now are younger people who, they're buying gold with Bitcoin, they're buying silver, with crypto, they're taking their stimulus checks and putting it in silver. And all these people who are going, look, who young people who are recognizing you can't just create 36% more of whatever. Andy's had a great statistic there before about, 36 cents out of every dollar has been created in the last 12 months. And you can't just print trillions and trillions of dollars and expect money to stay the same. And people who go, I see, that another shoe has to drop at some point, and I want to be prepared for that. And I want sound money in my life so that I'm prepared, or my family's prepared, and that kind of thing. So it's been really fascinating to see the real shift in a lot more younger people coming into purchasing physical, and taking it for delivery, and that kind of thing. In addition to also just playing the market and being involved in crypto and that kind of thing, but going, I need a real position in physical as well. So that's been a really fascinating thing. And I guess, Dunagun, to your question of the kind of things that they're talking about is this sense of, hey, it's time to take this back from the banks, and it's time to let the economy be something that's for the people.
Thanks, Kaiser. We'd like to ask Mario, as a contrarian, if you can let us an unconventional view of financial matters. If you look at this phenomenon that we've slipped into for the past several generations of people relying almost exclusively on fiat currency and really having forgotten, just generationally forgotten about the connection with sound money, now we're hurtling into a potentially cashless society where every transaction is going to be digital. Most of them already are. People worry about the loss of the value of the dollar. Well, we've already lost 98% of the value of the dollar since 1913. As a unconventional thinker in this space, what do you see ahead for the plight of people? Because the case is being made here by several people that it's in the interest of the people for people to reconnect with sound money. But that's not a common idea yet. So as someone who thinks unconventionally, how do you see going forward that affecting people's freedom, affecting their ability to direct their lives, affecting to be prepared for what changes may be coming?
Yeah, I'll give you first a rundown on my background. I worked for 20 years as a futures and options broker on government bonds in the city of London. And then in 2002, I bought my first gold coins. And then in 2003, my first silver coins. I had started reading about Austrian economics, sound money. I even went to the Mises Institute 20th anniversary in 2002. I met Dr. Ron Paul, and we had a really interesting conversation after one of the conferences they had. And I asked him about Alan Greenspan, and he told me that he went up to Alan Greenspan after one of the testimonies, the Humphrey Hawkins, they used to call it, semi-annual testimonies. And he took him that the essay that Alan Greenspan wrote called Golden Economic Freedom. And he asked him to autograph it, and Alan Greenspan autographed it. And then he asked him, do you still believe in all you said back in 1966? And Alan Greenspan said, yes, I do. But unfortunately, the people like the inflation. The people want the easy money, the easy credit. So yes, when I started buying gold and silver in 2002, 2003, I started looking into it because the first time you hold a gold coin or a silver coin, at least for me, it was kind of like a eureka moment. And you realize, wow, this is really beautiful, precious. And then you learn all about the monetary history, sound money, the fact that the name of money in many languages actually means silver. Yes, but at the same time, I started noticing in the gold and silver market, which I followed very closely because, by buying gold and silver, you get an interest in it. I saw that around 1:20 p.m. London time, gold always used to drop, and at other times as well. And I started trying to look into it, and I realized that it was the futures market as well, opening at that time, that there was something that didn't really make sense, that at particular times the market would do the same thing. Because in the government bond futures market, it was a much bigger market, the government bond markets, and the price movements were a lot more random. And then I learned about Bill Murphy and GATA, and I've been following him since 2002. And I have to thank Bill Murphy for that. And it's been trying to teach people about sound money. I've been trying to do that since the beginning of the century, 2002, 2003. I got a lot of my colleagues into it. And then finally, about 5 years ago, I started my own channel when I'd left the city. And I've been telling people for over 5 years that the only way to defeat the bullion banks and the central banks is to buy physical, because as David Morgan said, the silver and the gold market are basically controlled by the bullion banks. It's, the tail wagging the dog, so to speak. Uh, and I'm really happy that people are waking up to this. It's been a lonely, how can I say, journey. And I think, like Kaiser said, he's seen a lot more younger people buying silver and gold. And I've noticed that as well. Also, like on places like Instagram, that I have an account. Uh, a lot of bullion dealers, they're all young, and people are waking up to it. I saw a meme the other day, a picture, because now they're talking a lot about the minimum wage. They want to set $15 minimum wage, and people think it's too high. I would say it's still a ripoff, because I saw pictures the other day that they showed 5 pre-64 quarters, which is $1.25, of course, and that was the minimum wage back in 1964. And if you melt these coins today, you get about $24. So it's not just about the price. Silver, yes, I'd love to see the price of silver a lot higher, but I think it's more important for future generations that we go back to using silver and gold as sound money, because we know that it limits, like Alex said, statists hate gold and silver as well. And even Howard Buffett, Warren Buffett's father, said that you can't have economic freedom without having a currency that is convertible into gold. And I would add silver as well. So I'm really happy that the silver movement is picking up. I think what happened in the beginning of February is just the beginning. It's like the first inning. We're probably still in the second inning. I think there's still a lot more innings to go, of course, but it's getting easier and easier. And I think Bill Murphy probably agrees with me that it's great to see people waking up.
Thank you very much, Mario. And I know Andy Schectman, CEO of Miles Franklin, if you're still there on the line, something that Ivan brought up and that Mario echoed was this idea of awakening the masses. It's something I think that you've experienced with some great challenges as the CEO of one of the largest and most long tenured gold and silver companies. How has that awakening of the masses been evidenced in your experience, and where do you see that trending?
Yeah, well, first of all, it's great to be here. It really is. Being in this industry as long as I have, I mean, I was doing this before internet and before emails. I remember thinking to myself, well, who the heck would ever want to send an email? And why would someone text when they could just call? I guess Chris Marcus likes to call me Gramps a lot, and he likes to make make jokes of the fact that I've been doing this for a long time. But several of the things I'm going to say are in reflection to that. First and foremost, I had dinner with Bill and Chris Murphy and Powell right after they started or formulated GATIC, well north of 20 years ago, it seems like, anyway, in Montreal. We've been following them and understanding the manipulation and the conspiracy long before it was in fad, long before it was considered the thing to talk about. In fact, Miles Franklin was often chastised by people for talking about a market that was rigged. Why would anyone want to buy into a rigged market? I remember almost 20 years ago meeting David Morgan for the first time and David, and having long conversations about market rigging. And we've been talking about this as a group for a very, very, very long time. And sometimes, in life, you just have to be there when things change. You have to have strong fingertips and be able to hang on to see things through. They never play out the way that you think, but ultimately they do. And just a few comments to that. In terms of silver, way back at the beginning of my career, which started in 1989, the real applications for silver weren't yet really understood. We weren't a digital world yet at that point. everyone thought the lights were shut off when silver was more or less taken away from photography because we went to more of a digital application. But yet, the digital age was yet not even a thought. And when we look at the first on the industrial side, and you know, the letter that David read was fantastic, and I'll mention one other thing about that in a moment. But first of all, when we look at the industrial side, you have so many things that people haven't quite yet grasped. We have a silver price that's reflective right now of almost 70 to 1 or somewhere in that neighborhood. Yet, and Keith Neumeyer has told us all it's coming out of the ground globally at 8 to 1. You have a world that is in need of silver in a digital green world, and an expansion of uses for silver in this green and digital world, all the way to the Chinese Belt Road and Rail Initiative, connecting 70% of human population, which is now underway, with an asset class that is depleted, with an asset class whereby only 240 million of the over 800 million ounces that are mined come from actual silver mines. The rest of it comes from people mining other things and say, oh, look, we found some silver. Great. Point of it is that this is an asset where people haven't yet quite, I think, grasped the fact, we all have, the bullion banks have, central banks probably have, that it's an asset that is massively needed. How about 500 ounces of silver in the tip of every Tomahawk cruise missile? The need for silver is massive, and it is growing exponentially while the supply is shrinking in nature. And because it is used in so many applications in such small amounts, it's never scrapped out. It's gone forever in landfills when the industrial applications, or blown up in bombs, when the industrial applications are through. So this is a problem. But as David's letter said, and that letter was spot on, this is the rinse, wash, and repeat that we've seen for 30 years. Something Mario said about a market that would do something similar at the same time. Well, heck, I've been talking about that forever. Dimitri Speck, been in so many of my presentations. The AM fix, the PM fix, smack, every single time, day after day after day, every single Sunday night, get the crap smacked out of it. The 2 a.m. massacre, every single time. When will the funds wake up? When will this rinse, wash, and repeat end? Well, I'll tell you when it will end. It's ending, and it's ending for a few reasons. One of the things that the trader said was, well, we need an awakening of the investment demand. And you know, God bless guys like Jimmy and Ivan, and who are awakening so many people, and Chris and Dunagun, who are awakening people through alternative media. The fact that the young people even know a silver coin now fell on their foot. All of you guys who are doing this should be so, I don't know, proud of yourselves. I'm proud to be friends with you all and associated with you all. And I say, God bless you all. And from the bottom of my heart, you have reinvigorated me into believing what I have believed myself. As I've always told publicly, when I started in this industry, I was 19 years old. I'm 50. And my dad told me the only rule I needed to follow was to buy something every 2 weeks when we got paid, or he'd fire me. Now, as I've said before, he's retired. I'm actually with him tonight here in Florida, and we're talking about this recently. And, you know, he's not going to fire me any longer. I'm the owner of the company, but I've honored my word to him for 31 years. I've bought something every 2 weeks. It is wealth. It is not an investment. People are waking up to this now because of you folks. As the trader said, what will tip the scales is the investment demand. When you look at an asset class that is as wickedly undervalued and is expansively accumulated in a growing demand, and use cases expanding by the day and supply decreasing by the moment, the missing piece has been, I think, two. Number one, an awareness from the public that silver is massively needed. It is needed, and it is expanding in use case, and that is depleting in nature dramatically, coming out of the ground at 8 to 1, yet valued at close to 70 to 1. And number two, the investment demand. And I will tell you, as the owner of Miles Franklin, in all my years, there is nothing that rivals what we are seeing right now. And I've been saying this for quite some time. In fact, speaking at a Sprott convention 4 or 5 years ago, in fact, it's still online. You can Google it. And maybe 2017, 18, I don't know. But I have a slide in there saying the market will define itself by an inability to source physical product. And let me tell you, it is happening. It is happening because of you all who are telling people logically what's happening, rationally what's happening. Rob Kientz, fantastic information, illuminating people into a very logical, systematic view of why this has happened. All you guys are waking the world up, and it's having an effect. The single, as I told Dunagun earlier this morning, the single biggest challenge that I face as the owner of a company that's done over a year's worth of business in the first 3 months, which is ridiculous.
Oh,
sorry, guys.
Oh, there he is. He's back.
Well, I didn't mean. Sorry, guys. I'm as you can tell, I moved into a new house today, and I don't have my Wi-Fi yet. So let me just finish my thought, and I'm done. And that is simply this: you guys are feeling the missing piece, and that missing piece is telling people why silver is needed so much, and the realization for the first time ever that these people globally are waking up. I've never experienced or seen anything like it. It's happening, and it's happening right now. And I don't know how it all plays out, but I can tell you I've never felt anything like this in 31 years. And so kudos to you all. I'm so thrilled and honored to call you all friends and associates, and happy to support and further the cause. And that's pretty much all I got to say.
Thanks, Andy, for joining us. Know that this is the first day in your new location, so thanks for joining us, and we'll let you free at this point. And I wanted to get Jim and Ivan the chance to tell us what people are expecting. We're hearing from people about the activities that they're going to be doing starting this weekend, May 1st, why May 1st is significant. John Adams, if you want to follow on any additional awareness of major ways that people are taking care of themselves and protecting themselves during this time. So Jim and Ivan, could you kick that off?
I think Craig Hemke of TF Metals Report, he's the one who really sort of got the ball rolling on what's coming up on May 1st. So call out to him for him being the initial energy who got this. And so it's my understanding back 10 years ago, there was a massive smackdown to the silver price that was probably organized and orchestrated by the powers that be. And silver fell dramatically. And so Craig's idea, and he's got an article, we're going to be posting it and pinning it at the top of Wall Street's, the Reddit community, Wall Street Silver. He just wrote an article in Sprott Money about all this, is to get everyone organized. And he wants, I believe it was, I forget how many people, but he wants everyone to buy 100 ounces. If you can, if you can't, buy a couple ounces. If you can buy more, buy more. But his idea was to have as many people as possible buy 100 ounces of silver around, it doesn't have to be exactly May 1st, of course, it's on a weekend, but try to buy as much as you can on May 1st, and we're going to really go after this market. And it's my understanding that a lot of the bullion dealers are getting behind this, and they're going to be offering specials. I've spoken to 3 different CEOs of bullion dealers who are going to be specifically dropping prices as low as they can for that weekend. So it's something for people to be looking for this weekend, to be out there and let's buy as much physical as we can. And we're really going to go after this market from the retail side. And a lot of people are buying PSLV, the Sprott Trust, because that takes literally the 1,000-ounce bars off the market, which is probably one of the most effective things we can do. But that's what we're doing on Reddit. We're working with TF Metals, Craig Hemke, and we're supporting what he's basically kicked off.
And just to add to that, like a lot of stuff is going on just outside of the May 1st silver squeeze that's coming up. For the billboards on May 3rd, a lot of excitement. We're going to have people go to these actual billboard locations. so that they can take pictures and start spreading it on social media, so that can cause more social awareness. That's our whole main goal, is to raise the silver awareness. A lot of people are getting ready for this May 1st raid. I seen on today on Wall Street Silver, one guy bought enough for 20 apes, so that was 2,000 ounces. So a lot of people are buying a incredible amount of silver, which is really exciting to see. A lot of people from different communities, a lot like younger crowds, meme communities, a lot of these communities that are just focusing on social media are coming to Wall Street Silver and focusing on silver. A lot of you're just seeing an awakening, which is really nice.
And just to clarify the lingo there, the way I understand it, you mentioned gorillas. These are also known as silverbacks in the natural world. So there's the connection. Okay, John Adams, if you could give us a send off on what major trends you're seeing and actions people are taking to take care of themselves.
Sure. Thank you for this discussion, Dunagun. I think it's very important. The probably I'll leave with 2 points. The first one is that while, for example, people like Bill Murphy have been talking about the bullion banks, and largely this discussion has been about economics and the banks. At the end of the day, this is a power struggle. It comes down to politics, and the fiat currency system is the financing of that power struggle. So, people around the world are waking up to the schemes of the elite, and whether it's in Australia or the United States, or in Canada, particularly Western countries, we've gone backwards in 20 years, both economically, socially, health-wise, and a lot of people are sick and tired of where the world is heading. We want to take political power back. We want to restore honest government, honest judges, and have a free and fair market. So I look at this raid that's happening on the 1st of May as the new sort of round of populism by small people around the world who say to the elites, enough is enough. So that's probably point one. And point two is that it has taken me some time to fully, at an intellectual level, understand the veracity of this pricing scheme. And we are talking about an entrenched international syndicate and it's not just New York and London, it goes beyond those two cities, of how they've been trying to manipulate these prices. And I think that as we continue to see more aggressive buying at the retail level, we're going to see more exacerbated shortages right around the world in the silver market. And in that process, you're going to see more and more corruption being exposed. So, in previous shows, Dunagun, we've talked about fractional reserve synthetic programs. There's a lot of them. Some of them have been exposed. I've been commenting on quite a few of them over the last 6 weeks on Twitter in particular. But I dare say that fractional reserve allocated, segregated, that's the next penny to drop. And I think maybe the next 6 months or so, we'll start to see some evidence of that coming forward.
Well, that's sobering, because as people have been trying to take care of business for themselves, you're seeing it as part of a much broader picture with great implications about empowering ordinary people. We've talked here about many things tonight. Appreciate everyone's contributions, talking about bringing fairness, transparency, talking about removing the fuel that has underpinned war efforts and so on, and military adventurism on the part of governments around the world, and restoring. And from my personal background as a preparedness platform host, talking about people just taking care of themselves, their families, making sure that they don't, as Ivan had mentioned, that they aren't financially destroyed as a family and as a household by the destruction of their currency, but having something real to hold on to. Many topics we didn't get to, or didn't even just scratch the surface of, but really appreciate each and every one of you for joining us this evening on this first ever All-Star Silver Summit. And thank you for being here, and just look forward to perhaps regrouping and having a post mortem of what happens after this coming weekend. I'd like to hear more from Ivan and Jim about their billboard campaign and raising the awareness of the populace. And Bill Murphy, thank you for being there for decades, fighting the good fight and helping this next generation to have an underpinning, to know where we've come from. And so hopefully we can find the way that we're going and take care of our families, take care of ourselves, take care of our communities and our countries in a responsible way, and have truth and fairness in our markets. So thank you all for being here for this All-Star Silver panel.
Thank you so much.
Thank you. You're welcome.